Hi, welcome to this episode. In this episode, I'm going to talk about what's happening in the market and why I believe we didn't run as much as I thought we would after consensus. But then looking back at past years, we don't really run as much right after. It's about a few months after is when the big run happens. And so this is the first year for Bitcoin futures. So coming up tomorrow, actually, we end one. There was 5 of these things put out. You can... Oh, that's not moving right. Okay. So there's 5 of them. March, April, May, June, and September is what they call the contract months. So the first trade for the one in March started December 15th back in 2017, and it ended March 29th. They do have a few days to settle, and on April 4th they could settle that one. The next one was January 29th through April 27th, and you could settle it on May 2nd. So we have 2 of them completely done. We're going to go look through that data here in a little bit. The one in May is not done. It's ending tomorrow at 4 or today at 4 o'clock, and it started February 26th, ends May 25th, and it gets settled on May 31st. So I'm kind of going to tell you my prediction of what I believe could happen, will happen, based on the other 2. And then we're going to look also at the one that ends in June, what I believe is going to happen or could happen. And then the one in September is a very interesting one because the last 2 are 6 months. The other ones are only 3. February, March, April, May. So they're 4 months. January, yeah, they're 4 months. And the other ones are 6 months. So it started April. So you'd have April, May, June, July, August, September. That's 6 months. The last 2 are longer ones. And it's going to end in September, but it started April 3rd. So once I get in on here, I'll explain this a lot more, what this is. Okay, so the one that started on the first one, it started December 15th. So what I did is I went 1 week before, 1 week after, and took out the data. And so this is what the data is right here. This is the price of what it opened, the high for the day, the low, the close, the volume, and the market cap. Most of what I've looked at was just the open, because what the high and the low was doesn't really matter. You just want something consistent. And if something shot up a lot one day and didn't shut down, you got FUD and all the other stuff. So, but if you went with when it opened or closed, whatever the closes is, basically opens a little bit more than that the next day. So on December 8th, it opened at $16,601. So leading up to that, we were up to the $17,802. And they knew this futures was coming. So I believe whale money got in there and did what they could to drive this thing down. And they drove it down almost $1,200. They drove it down to the 1,600. And then once they drove it down to that date, they let it go. And within 2 days, we're up to 1,900. It rose almost $3,000 in 2 days, because there was no one pushing that huge market down. Because in a future market, you're betting on an initial time and a final time, and you get paid the difference if you make it or lose it, which I'll go into more numbers here. But this is just on the December 8th one, the initial one. December 15th, sorry. The numbers on the left are just number of days. So my numbers down here at the bottom. This was the average total open, and this is the average was 17.0525. As you can see, the average, they drove it down lower than below the average of the 15 days. So then, what we had then is that one closed on March 29th, and again, you can see we had almost a $9,000 Bitcoin up here less than a week before it. You drove that down down to 8,000. They drove it down $1,000. It's, again, it drives it down to that date. This one did not stop driving it down, which kind of surprised me, actually. I thought after, once they drove it down to this price, because they would, it let it go back up, but this one actually kind of just kept going down, and that could just be a market trend. But you know, the whales wanted it down. So before the week, I would say they had control over manipulating it. And then on this April 4th is when the settle date happens. So when you buy it, you buy the future and they settle it. You'll see some money. I thought there'd be a big jump up, and there wasn't that big a jump up, but on that day there was a little jump. It was $500 in a Bitcoin, which in a day is not bad. And then so it was going down, jumped up, and then dropped shortly after that, because they pick either take some money out or do what they need to. So yeah, here's just the numbers. Again, it's below that average of the 15 days before and after. It's just a tad higher, but it just ran lower. And then that was the first one. The next one, it was a January 29th one, and this one kind of went the opposite way a little bit, but it was just kind of a steady market. It was starting to drop, and so as they initially went in, see, you wouldn't want a high market because it's going to cost you more, because you're going to pay approximately $50 on a normal stock. To get into future, it'd be $50 times this number, which would give you your market of what you'd pay. And then when it comes out, you do the same thing, $50 times the market at the time out. And if you decided to go short and it went down, you'd get money. If you decided to go long, which you believe the market would go up, and it went down, you'd lose money. And we're not talking little amounts of money here. And so once that future started, the price kept going down, but we were in a very bear market here because we had that huge spike. People were selling off, and it dropped in a hurry once that future did it. So I don't know if they didn't get it sold off enough in time, or what happened there. And then again on April 27th is when that one ends, and they tried to drive it down, but the market resisted, and it almost got almost up to 9,700, and then they kept driving it down. They got it down to 92, and then this is what I thought would happen a lot in the other one. Whenever you have a payoff, you get quite a bit of money if they're right. And for the contracts I've seen, most of them are trying to short, the majority. And we'll see that in a little bit here. So once that payoff is, you have a run up, because you just got quite a bit of money, and it pays out to the exchange, and you have the option to cash it out and do what you need to do with it. But again, it was a little run up there. So by both of them, especially the first one, they pushed it down a lot more. In both of them, they're trying to push it down because you're squeezing money. The one we have right now going on is that ends today. It was almost 11,300. Then they drive the price down, and they drive the price down to as low as they can, and it was $9,669 on the market day. Once they drove that price down, they don't care. All they care about is the next day. They want it lower than that. So they're going to do what they can to keep it below this. If they're betting short, if they're betting long, they want it price but most of them were betting short. So then they don't care if this market goes up because the whales are out. Now the whales probably want to double dip, put their money in now that they bought the market down, and get back in and ride it up. So now they're going to make money as they ride up, and then as it gets closer to this May 25th deadline of selling out, you're going to watch another dip. When I did this, I only went to the 23rd, but as you can see, we were at $9,000 here, and they are driving it down. We were over 9,500 right before May 10th and 11th. So they're driving it down to right around 9. They're trying to keep it down. They got down to 8, and they driving it down. The price as of right now is, what is this price? 7,600. Jeez, they drove that down a lot. So you've had lows like right there. The low for the day was 7,500. Look at them drive that down. That's a lot driving down. Dude, I bet if we go up here, now that just looked at the low. I bet if I look at these lows, I bet they're lower than this low. 9.4. Not as low as I thought they'd be. They'd be down. Let's see what. April. One that ended in March, right here. I bet this low is close to almost 7. Yeah, right there, 7,165. Oh, under 7. Right at 7. Went from 9 to 7. That's what you can drive that price down as a low on that day, and it got brought back up, but they drove it down to there. So as you can see, they're driving down. But positively, just like on April 27th, I think we're gonna correct a little. They're gonna ready to run. It's a little. This one's kind of stayed the same. It was a little, but it jumped up a little. See, but people are expecting a bull run right now. And so here's the other nice part, is that this is the last one. The last one is for the next one, the one that ends in June 29th. We started that one December 15th, and that was 16,000. So we got quite a ways to go. I'll get back to that number too in a little bit. But the one on April 3rd, which is the last one that goes to September, which is going to be the very interesting one, because I don't know, that's a long way out, and it's going to be hard. But it was again 8,200. They drove that price down under 7, and finally it settled at 7.1. And after this, it jumps the very next day, 7.5, and it's back up in the 7. You had a big run right there, because after they get their initial pump, they pump it down on that day. Their goal is to pump it down as low as they can. Okay, so there's two different kinds of futures market. What I found out is you have the CFE and the CME. The CFE is your contract size 1 Bitcoin. Okay, that thing is basically whatever your price of Bitcoin is your contract. But that's based on the Gemini exchange auction price for Bitcoin. Is what the CFE is. Your exchange margin requirement is 44%, which is huge, because on a normal stock market, if you had, say your future contract was a $50,000 contract, you don't have to put $3,000 down. You're talking less than 5 to 7% right there. But these, because they don't know how it is, they're hedging their bets right there with a 44%, and it's only based on one exchange. The CME is a lot bigger, because now your contract size is 5 Bitcoin, and so whatever it is, you need to take that times 5. But this is based on the trading platforms, including Bitstamp, GDEX, IDEX, and Kraken. And you also have a 47% exchange requirement. So back to the the first one that started December 15th, ended March 29th. For you to initially get in, you would have to pay $16,601.30 times approximately 50. I've heard it's higher than 50. I went with 50 just because that's what a stock was. Some of them said it could be 75 or 100, so this number could even be bigger than this. And that's $830,065 is what your initial would have to pay. For you to pay that 44%, you're talking $365,000 to get into a future. And that is just the CM, was it CME? CFE. CFE's one. But when you cashed out on March 29th and it was down at almost an $8,000, you would lose almost $400,000. So your profit on this one contract would be $431,111.50 a profit per every contract you had if you betted it too short, because it went from 16 to 8, which is about half. So you would make almost 50% of your money, or you'd make 400-some thousand, and that's profit. So you'd walk out with what, $1.2 million, which is just insane number that you can just do that. But if you said that it was going to go long and it went short, you would lose $431,000. So you can make a lot and you can lose a lot. And then the one that was January 29th through April 27th, it went from $11,755 down to $9,290. Your profit on that, your profit on that was $123,000. But you don't have to pay. On that one, you only had to pay the $258,000 on almost a $600,000 bet, which is a lot. And then on the day they cashed out, I put the blues the cash out day, and as you can see, it's about almost like 5 or 6 days later, and it's still a little below that, but it's not much. And you can see the market barely going down because they still push it. They still push down. Okay, so the one that we are doing now, it started at the $9,669. We were at $8,000 when I initially did this. Now we're at $7,624, so it's even going to be more profit. And you're talking about $81,000 of profit. So when they initially did it, you're making a ton of profit because Bitcoin was so high and then it's so low. But they are still making profit, and there might be lots of them. Like you probably just don't have one of these. And so, anyway, went on December 15th, which is our next one coming up, is right here at 16,601. This is the average, total average of the whole thing. So they drove it down to that price. So the second number in all these is me showing that they did drive the price down. You can see that they drove it down. Someone's driving it out. Something's driving it out. We don't know what. And so 17,000. So I believe we have a little bull run coming here soon. When do I think it's going to start? Is you have the May 25th initial, where when it finally ends, they're going to make their profit. They do not get paid out until May 31st. So around May 31st, somewhere between there, you will start having a bull run. they will do their darndest to right around June, was it 23rd to 26th, which gives you 3 to 6 days before that 29th time, you're going to see it drop. But it can go up to as high as 16. I think we're going to go from just off of this alone, no technical analysis, no anything else, just off of these numbers alone, knowing what we can ride it up to, where the big bull money is going to come in. Now, if we get some regulation and big money starts coming in here, they might decide that they might have decided, hey, the big money's coming in. We had a bull run last year. They might go long, and they might want to shoot it higher than this. So if you had this initial price and you decide to go long, they might not stop it if they didn't want to. And why I keep saying they, here in a second I'm going to get to an article, but I think right around that June 23rd, I think we're going to be somewhere around 12 to 13, because I think they're going to let this ride up, and we're going to have a resistance somewhere around 12,000 to 13,000, because they're not going to want to go to 16 and then they just have to try pushing down back to make any money. So I think at 13,000 you're still making 3. You'd still have plenty of profit. You'd be somewhere around you'd be a little bit more than 120,000, 123,000 in profit. So, because this one you're only at, basically it's 100,000 with only almost a $1,500. So this number will get up. This number is going to end up being really close to this, 123,000. But if that's the case, you could go to 14,500, 14,000. The one that's going to be very interesting, because if they went short, and we're talking, let's say it's 14,000 on June, July, August, and September, 3 months, I don't think you can drive that price down enough to go shorter than 7,000. So I think they're going to lose money in the one in April, from April to September, unless they went long. And if they went long, they want to go the opposite way. So because of this, I'm gonna go look and see what happened. Let's go back and look at that April 27th one that ended. Where's April 3rd? April 3rd, they're going to drive it down because it's an initial. They want that number as low as they can to start with, to play with. The one on April 27th, it went, still dropped, but it was up here higher. It's interesting. It's very interesting, because this is a final one. Is what they wanted. So it did drop, but it went up. But it made them money. I mean, they had from 11,000 to go play with, so they made them money, but it went up. It's interesting. I'm just trying to figure out. I'm trying to think logically. What would they be thinking to try making this for September one that you don't even know what a market's gonna be like? Like that one would be so crazy. The 16, I can see them trying their hardest to keep it under for the June, unless regulations come in and they can't. The April to September, they might just take a loss, but I don't know how much of a loss you want to take, and if that's the case, they're gonna have to buy it low, like as these markets come, like on the settlement date. Usually they jump up because they're putting their money back in, knowing they're gonna drive the price up, kind of double dipping in it. So anyway, yeah, so that's kind of that. I got a lot of information from TD Ameritrade, the Investing Basics Futures. This one was pretty simple about what what a future is, how it is. Not so much about what crypto is, but once you kind of knew the basics of what a future actually is and how you make money in it, and then went to TD Ameritrade's site, you could actually read and kind of put it back into crypto. So this was this. What I kept referring to them was, this article was done December 19th, 2017. And I kept referring to them because I don't know what percent they have now, but then it's right here. 18.14% of the total coins, roughly 53.6 billion, as of December 5th, are held by 113 Bitcoin addresses. Well, 56.3 or 53.6 billion in our $400 billion market is not big now, but at the time of this, the market was only in the 200 to 150. So they owned 20% of, almost 20% of the market was this people, this 113 Bitcoin addresses, which you know they're probably the ones getting into these futures. And then this is what the, I can't remember what his name was, but one of the other people on YouTube made a video, and this is the only report I could ever find about them. And this is the CME, so this is the one where you had to have multiple, it's right here, the CME is where you had 5 Bitcoin. Ooh, where the heck did I just go to? There you go. You have multiple Bitcoin. 5 Bitcoin was in order, and that's where they had Bitstamp, GDAX, IDAX, Kraken. So in it, it's very kind of confusing. I'm not sure about what all of it is, but what I can tell you for sure is when I come down here, reportable positions, all old and other. See, non-commercial people are going longer. The commercial people is your big money. And most of them, 11,203 are in short. 7,206 are in long. The total says long. So the total mark contracts of 2,000 pounds. So the percent of open interest represents by each category of trader. 89, almost 97% are still open. Because when you get into one, you can either close it on a certain day or decide of a shorter period. And so as you can see, we had 11,203 versus 7,000 total. And what's this? Reportable positions. Contracts of 44,000 pounds is about almost even. Contracts of 200,000 pounds. Contracts of 20,000 pounds. So 2,000 pounds. Yeah. 40,000 pounds. They're so close all the time, like long and short. Like, the company's probably not making much. Like, board feet. 50,000 pounds. 40,000 pounds. Wait, cheese? Oh, I was looking at, okay, hold on. Wow, I've been looking at the wrong ones. So, this might be a lot longer than I thought. Milk. I did not look at this right. Dairy milk, hogs, cattle, dry wheat, cheese, Russian roulette, Canadian dollar, Swiss francs, Mexican peso, British pound, Japanese yen, Euro FX, British pound rex, Brazilian real, New Zealand dollar, South Africa rand, 3 months, Euro dollars, Bitcoin, and you can see shorts are ahead. Non-commercial shorts spreading. Total shorts. There's your shorts. More shorts are always winning. S&P stock. That's the one we need. I'm sure it's the Bitcoin. Healthcare index. 400 stock index. Australian dollar. Nothing. So that's the Bitcoin. I just wasn't sure what they had it broke down to, if it was just Bitcoin or... Where's it at? Okay. Futures only. Futures only May 15, 28. So open interest 2,505. 28 traders. Oh, I'm sure them 28 traders are the 100 some people. Because I bet if you've seen the, not the CME one, the other one, I bet this number's a lot higher. 2,052 versus 1,675 say long. Percent of open interest represented by each category, 81.9% are still open versus 70% are open. If all these guys closed and took their loss, they're still open. So yeah, you can see what they wanted short. But here's the interesting part, is the Justice Department opening criminal investigation into price manipulation. You think? We just showed you what days they're going to manipulate it. Look at this. There's no indication of the impact these prices have on a current regulated Bitcoin futures market. No, there's no impact. So they're saying there's no impact on the practices. We recently saw the highest single-day trading volume in its young history. Go away. So yeah, how the outcome of this investigation will affect these existing exchanges or even the multi-large financial institution building trading desk is currently unknown. Of course it's unknown. Some of these articles are just stupid. It's like, of course it's unknown. No one knows anything. It's like something you haven't seen before. What we have seen is the Bitcoin price go way down, plummet. Why? Because the futures is ending. So anyway, that was my thought on this article for today. I believe we're in for a little run here to about 14,000 because the futures are going to let it run. Till I see you next time, have fun, peace out, and have fun. Schultz is strong.